Convertible bonds are the secret sauce of this recipe, known as the intelligent leverage by MicroStrategy. Michael Saylor, the CEO of MicroStrategy, people see him as a bipolar opinionated person who was pretty much against the Bitcoin, but right now he's adopting it like no one else, advocating for this like a mother to a child. Since 2020, he started accumulating Bitcoins through his decades-old software company, which is MicroStrategy, by issuing convertible bonds to the regular people. Here's how it works. MicroStrategy asks investors for $1 billion as debt, which will be paid back after some years with periodic interest payments. But investors are given with a choice. At maturity date, they can choose to convert bond investment into equity shares if share price of MicroStrategy has reached above a certain amount, or they can simply get their money liquidated into their pockets. So, span of 5 years, MicroStrategy did multiple bond offerings, and Michael Saylor used his money to buy Bitcoins for his vision to make the MicroStrategy a Bitcoin treasury copy or simply a Bitcoin bank while gambling on people's money. And this is being seen as a Ponzi scheme. A Ponzi scheme generally looks like this. A person with a certain vision raises money from investors, and to satisfy them, he raises more money from new investors and uses those proceeds to pay artificial profits to old investors. And the cycle or loop goes on until it gets collapsed. What do you think? Does this intelligent leverage strategy looks like a Ponzi scheme? In this case, the Michael Say can just keep on issuing these bonds to pay back the initial investors who choose not to convert into equity and buy more Bitcoins with the leftover money. First, why in the God's heaven people are buying these bonds? It's a safe bet on Bitcoin. Investors can simply buy the convertible bonds instead of Bitcoin, and after some years at the maturity date, if the Bitcoin turns out to be a flop show, they can just get their money back. It will be a bit hard to get money back from a banking company, but it will be good getting all the money directly to personal Bitcoin holdings. If the Bitcoin's value gets increased at the maturity date, investors can confidently convert their debt into equity at the maturity date with premium, which is currently almost 2 times of the value of the Bitcoin. This sounds unnatural. Really? 2 times the value of the Bitcoin? Sometimes this goes even 3x. Yeah, right now MicroStrategy holds 420, 300, and 650 Bitcoins. If you value them at $97,000, total Bitcoin holdings are almost $41 billion. But the market cap of MicroStrategy is $85 billion at the time of making this video. Do you see a premium of $44 billion? This conflicting amount cannot account for valuation of software business of MicroStrategy, as it's in the loss for the last 3 quarters. And also, before joining the Bitcoin game, MicroStrategy was valued at only $1 billion for most of the time. Now, presence of this premium is a double-edged sword for the MicroStrategy. The good thing is that MicroStrategy can issue some convertible bonds and buy Bitcoins with them at an expense significantly lower. And this will influence the stock price of the MicroStrategy with more premium. The way Michael Saylor explains this premium is by increasing Bitcoin holdings from the convertible bond money, giving bondholders a choice. But the risk of additional Bitcoin holdings are transferred to the current shareholders of the MicroStrategy. This definition of premium is just a temporary change in the thread between the Bitcoin price and the MicroStrategy stock price as a result of more price pumps because of Bitcoin buying. Let's simplify this in my own time. Let's just say that right now at $85 billion valuation or market cap, MicroStrategy issues $1 billion in convertible bonds and buys Bitcoins with that money. They will add up 10,309 Bitcoins in reserves. This much buying pressure will increase the price of Bitcoin, and this will ultimately increase the market cap of MicroStrategy, as investors will surely speculate on MicroStrategy on the basis of Bitcoin and also on this intelligent leverage strategy, which draws out the premium between the Bitcoin holdings value and market cap of MicroStrategy. So the 2.4% increase in Bitcoin holdings with full side momentum make the MicroStrategy stock price increase more than 2.4%. The bad in all of this fiasco is dilution problem. When these bonds will be converted into equity, it will be in the bad interest of new investors. Dilution of shareholding will be at the maturity date of the convertible bonds, and this process is generally seen as a bad thing among old investors, because the old investors will have less shareholding percentage when the newcomers enter. And if we do some math, there is something wrong underneath. Let's just say MicroStrategy has 1 million outstanding shares at $1 billion valuation. Each share represents $1,000. And at this market valuation, MicroStrategy decides to issue 1,000 shares and buy Bitcoins with proceeds. Think of this as a convertible debt dilution. With $1 million, MicroStrategy bought 10 Bitcoins at $100,000 per Bitcoin. It added up into the reserves of 100 Bitcoins, and now they are 110 Bitcoins. If we divide these assets to number of shares, each person owns 0.000109 Bitcoins. But with those additional $1 million, new investors could have just bought 10 Bitcoins separately. They are just paying the price of that premium, and if that premium vanishes because of the fears of too much debt accumulation by MicroStrategy or by Bitcoin price declining in crypto markets enough to make the MicroStrategy stock price fall below the convertible bond redemption price, MicroStrategy will have to pay back by selling assets, which will be the majority of Bitcoins. So Bitcoin price falls and so MicroStrategy's stock highs. So my interpretation is it's not a Ponzi scheme. This strategy does have some elements of Ponzi scheme, getting money through debt and buy Bitcoin to fly away its price and ultimately the stock price, which investors see as profits. But actually, it's just a Bitcoin reactor machine, as said by Michael Saylor. This strategy is just being 2 steps ahead in terms of price ups and also price downs against Bitcoin. Stock price reacts to the Bitcoin price in terms of multiples. If the Bitcoin price goes up 10%, the MicroStrategy stock price will go up 20%. If the Bitcoin goes down by 10%, then the MicroStrategy stock price will go down by 20% also. Premium arbitrage is giving MicroStrategy an edge to make more money, and as long as this exists, it's good for speculators. And still a Ponzi scheme, call it by another name like MicroStrategy scheme or anything like that.